Good afternoon, traders. Here's your quick market rundown for today, focusing on the US dollar, WTI crude oil, and gold, with global sentiment still largely driven by inflation data, trade talks, and central bank expectations. So starting with the US dollar, the stronger than expected US non-farm payrolls in May have changed the rate outlook slightly. We now expect the Fed to keep its policy rate at 4.5% through Q2, with the first 25 basis point cut likely in Q3, bringing it down to 4.25. After that, we see the rates holding steady through 2026. Despite ongoing tariffs, the government layoffs, and fiscal tightening, the labor market has held up surprisingly well. This resilience gives the Fed little urgency to ease in July. Tariff-driven inflation risk and potential fiscal instability may also limit further cuts. Unless we see a sharp deterioration in data, the rate cuts are unlikely before the September meeting. So turning to WTI crude oil, the oil prices remained firm on Tuesday as optimism over China-US trade negotiation lifted the market sentiment. President Trump said the talks were progressing well, which support the outlook for global growth and in turn crude demand. And meanwhile, the dollar index has pulled back, adding support to oil prices. Brent hit 67.19, the highest level since April, and WTI also rallied last week. And on the supply side, while OPEC confirmed a July increase of 411,000 barrels per day, Saudi Aramco plans to cut July's exports to China by 1 million barrels, suggesting supply conditions could remain tighter than expected. So finally, gold. Gold remains in focus as US and Chinese officials resume trade talks in London. While both sides report progress, the tone remains cautious. If we see meaningful breakthroughs, risk sentiment may improve and gold could drift lower. But if the talks stall or tensions rise, a gold safe haven appeal may return quickly. The real catalyst will be tonight's May US CPI release. A hotter print could reinforce expectation of a Fed pause, supporting the dollar and pressuring gold. But if inflation cools, the dollar may weaken and gold could find renewed buying interest. So for now, the markets are dancing between trade optimism and inflation risk. Keep an eye on the CPI data tonight, and it is likely to set the tone for both dollar direction and gold's next move. Thank you for watching and happy trading.